Hello, and welcome to IVoT Ion Investing. We're an investment show committed to long-term investing on a fundamental basis. I'm your host, Ed Butowsky, founder and CEO of Chapwood Investments. We are a financial advisor-based firm out of Dallas. Our clients include many professional athletes and celebrities. Back with us this week is our IVoT market analyst in Andrew Tang, Chief Investment Officer with Turner Financial Group. Andrew provides market insight to some of the largest funds in the world. Our IVoT investment analyst, Emile Westergaard, founder and CEO of IVoT Financial Training, spent 20 years on Wall Street as an award-winning fund manager and analyst. So welcome, Andrew. Welcome, Emile.
Thanks for having me.
So today, Andrew, we're going to tackle the recent market volatility, and then Emile is going to dive into our stock of the week, Mercado Libre, the leading online marketplace. Think of Amazon in Latin America. So, Andrew, why don't you take us through some of the stock market volatility, bond market volatility, the tariff pause, and tensions with China?
Yeah, there's a lot to unpack here. We can only expect stock volatility and bond volatility to remain the same until we have more clarity on the tariff issues. So we have seen a stock sold off dramatically in a fast pace, and we also have seen a recovery on a dramatically fast pace as well. And that has to do with a lot with an uncertainty of what to expect, especially for businesses. How are they going to plan their growth plans for the rest of the year, for example? Now, something really interesting happened in the bond market is that last Friday, the yield for the 10-year Treasury had jumped up to 4.59. That is a huge move. And as we know, in terms of foreign holders of U.S. Treasuries, China and Japan, they're in the top two spots. So there are reports circling around saying that China was selling the 10-year Treasuries to buy German bonds. But if they do that, they would just, basically hurt themselves because they'll be selling the Treasuries at a loss, and you're buying the German bonds, they're at a lower yield. So this is probably not the case. There might be some of that selling going on, but China has already indicated that they've been wanting to sell U.S. Treasury. They don't want to hold U.S. Treasuries, so much in their central bank, right, for their holding. So next is Japan. We don't believe the Central Bank of Japan is actually, or the BOJ is actually selling Treasuries, but on the flip side of that, it was Nippon Life. So Nippon Life is a financial firm, and reports have also shown that they've been selling U.S. Treasuries due to the level of uncertainty that's happening in the United States. And because this is a private enterprise selling it, there's really nothing that the Bank of Japan can do. So we can all expect the volatility, upside and downside, to stay around at these levels. And we do expect there's going to be some type of clarity going to come out of the China and U.S. tariff talks, perhaps in weeks, but not months, because this can't go on for too long.
So, Andrew, when they're selling the bonds, if they are selling the bonds, that makes the yields go higher. Now, yields have drifted lower. Is that to assume then that they came back in and bought them again?
Well, it's always a movement of flight to safety. So as a means of diversification, we're seeing more and more retail and institutional stockholder have diversified among investment arena to include fixed income as well. So we believe that the 10-year Treasury has stabilized. We don't believe there's a run for Treasuries. Otherwise, we will see the yield continuously go up. Right now it's stabilized. We see that there's sufficient amount of confidence, back in the United States. And that's why you see that the 90-day pause on tariff talks and also the extent of the exclusions that we have seen, computers, PC, laptops, electronics, and as well as the president coming out to say that they're open to extend another 90-day extension or further extensions from the 90 days. So this is more closer to reality because it does take a long time for companies to revamp their business plans and also to make plans to reshore the manufacturing facilities back in the US.
So the direction, because the treasuries are really a huge part of what's happening in the equity markets. And you see the 10-year treasury is down around 4.3, I believe.
Yeah.
Where do you think that it's going to go to?
I think it's going to settle around here about 4.3. I don't think it's going to spike up anytime soon. However, if we have further evidence that we're going to fall into another recession, then yes, it's going to go higher. But otherwise, I think the worst damage is already done. The way the White House have basically dropped the bomb to the world, and now it's just damage control, in my view. And it's just going to be more clarity, and it's going to be more good news going forward from here on.
So you said that if there's a recession, you're going to see the price go higher and yields go lower, or yields go higher?
Yields go higher, yeah, as a means of not having confidence in the U.S. economy. The Treasury will sell off, as dubbed the bond vigilantes out there, basically protesting the policy mistakes that the White House have made. And also, the 10-year Treasury is a indirect indicator to inflation worries as well. So the combination of the two really showcase the activities in the 10-year Treasury or the bond market. So we do see some way, somehow it is stabilized. But again, going forward, if there's any additional evidence to show that we will be falling into another recession, then yes, then the Treasury will sell off, and we believe the yield for the 10 years is going to stay up higher.
Interesting. I would have thought it would have been just the opposite. If we had a recession, that prices would go higher and yields would go lower.
No, that's for the short term. The short term will basically a lot of people will plow into the short terms, on the front end. But the longer term treasuries, it is still a very much of a measure of inflation as well as the confidence in the United States. Yeah.
So let's talk a little bit more about the tariff pause and the tensions with China.
Yeah, so the 90-day pause basically gave countries a little bit more time to negotiate with the White House, and that's a good sign. We need that to happen. And we still need more clarity coming out of China. Right now, they're still holding pretty strong, and they're not really budging or anytime soon. But we believe that there's going to be some convoy or a third party. It's going to basically be the peacemaker and strike a deal. Right now, at these levels, 125% tariffs, it's already not sustainable. It's not even real. It's just not going to prolong for too long. And again, I believe that more clarity is going to come about in weeks, not months.
Okay, great. So let's switch over to Emile. And Emile, why don't you take it away on the IVoT Forecaster and tell us a little bit about it and how it all comes together.
Yeah, what I thought I'd do today is at least start out a bit with just showing people the IVoT platform before we go on to the analysis of Mercado Libre using the Forecaster. And again, the Forecaster is one of our core proprietary investment tools at IVoT that you get access to by joining our platform. So I just wanted to give people a little preview of how the platform works. And again, it's a free site to join our community, and the link is at the bottom of the video, and the link is in the QR code at the beginning and end of our show today. Here is the actual community. Let me find it here, right? So this is our IVoT community. We have a welcome. We have different spaces on the left for Ion Investing with our shows, with Andrew's weekly market note, which you can access here. You can also subscribe to. and some other things, including new products and technologies we're developing in IVoT. And then we have our training programs, which, again, if you join the platform, you can try out the training programs for free. And then we have certification programs that we offer in personal money and in investing. We have more of those to come. That's really, and then the other thing is that all of our training is housed on our back-end platform. So as you sign up, you get to use these programs and the tools that are inside of here. So that's IVoT, just because, I think people are going to be learning, hopefully, as we move forward about our platform, and again, get access to some of the tools that we're going to talk about here as long-term investors. So let's go now. Unless anyone has any questions, let's move forward to Mercado Libre. And Mercado Libre is our stock of the week. We are going to use our IVoT Forecaster, which is our fundamental valuing analysis and valuation tool, to take a look at Mercado. We'll go there in a minute. As Ed noted, for those of you who don't know, and I live in Lima, Peru, so I absolutely know Mercado Libre. We use it here as part of our kind of daily life, ordering things, and it's Amazon for Latin America. It's very popular in Peru. Their biggest markets are Brazil and Mexico. Again, they are like Amazon, offering basically anything you can imagine in their marketplace, and then they offer credit cards. They have other kinds of programs and vendor financing, other things on the platform. It's been a great stock. Let's just go look at that for a minute. For those of you who have been aware of Mercado for a while, let me find the actual. Wrong one. Hold on. Yikes. Where are we here? I'm going to find it here. The chart. Let's pull up the chart first. So, the 5-year chart, it's up 250% over the last 5 years. Great return. In the last 1 year, it's up 50%. So it's been very solid. And year to date, it's up 20%. So in what has been I can't remember what's the VOO done so far this year. I think it's flattish maybe, or it's come back a bit. So it's probably flattish. And so Mercado's definitely outperformed in any case. It is, just for those of you who want to know risk, it's considered a risky stock. It's got a 50% implied vol according to options traders. So, that's an interesting thing to look at for a company with this much sales volume. Might be, for those of you who get into the deeper end of the investment pool with us, we can look at ways to take advantage of that high vol. Let's now go to the forecaster and really just look at it fundamentally. And again, we're long-term investors here at IVoT. We want to use this tool, which is called the IVoT Forecaster, to understand what the current cash flow value of the company is compared to what it's selling for. Right, so we can see the share price right now is $2,100 a share, and the market cap is $106 billion. We've all seen the shares have done very well. The most recent operating cash flow was $980 million in the fiscal fourth quarter of 2024. Well, the first quarter of 25 should be coming pretty soon. By the way, we update these tools quarterly, so you'll get a new version in a couple of weeks when they give updated numbers. And then what we do is value that cash flow stream, and you'll learn how to do this on IVoT, but basically, according to our methodology, the implied value of a $980 million cash flow stream is $130 billion. And that's, since cash flow grew from 396, that's up from 43 billion. On a per share basis, that means it's worth a little over 2,000 a share, up from 860 a year ago. You're buying it for $2,100 right now, so pretty close to intrinsic value. Pretty interesting, I think in a way, it's a testament to the power of this tool. The market is essentially giving you this business for no growth, and that's another way to look at it. And so, what we want to say is, what we can do with this tool is say, well, what happens if the business continues to grow? And it grew sales in the most recent quarter by 37%. It actually increased its cost of goods. So sales growth was great. Profits actually went down a bit. So if we simply go by trend and say for the next 3 years, if they grow at 37% compounded, that would get you to 15 billion in quarterly sales and 4.6 billion, I'm sorry, 4,600 in implied value per share. Now, on that basis, if they continue to grow at this rate, looks like an interesting stock to potentially buy. Now, this is all very high level, and our tools enable you to go much deeper into this analysis. We want you to do the work and understand the business. But on the other hand, that would come down if profitability continues to decline. So if we said, well, their expenses go up to let's say 56.5% over the next 3 years, they can, then you're down to 4,100, but still it's a buy, right? I mean, you still got 100% return based on the current trends in the business. That's basically it. Then we can get into the fundamentals. Again, I mean, this is a business, as I said, that has, again, sells everything you can imagine under the sun, like Amazon, and has a financing business. I'm guessing, according to what they're saying anyway, that the main reason that the profitability has declined is actually growth in their credit card issuance business, where they're currently losing money. However, what they're saying, and it makes sense to me, is that that's all due to a lot of new credit card issuance that tends to have a higher rate of non-payment. And as they mature their credit card holdings, that should become a more profitable business for them.
So, Emile, for anybody watching this seems very daunting with all this information, but all of this information is readily available even on Google Finance, correct?
Yeah, our tools are built off of their quarterly SEC filings. We don't make up any of these numbers. The forecasting, is something you do based on reading as you said. I mean, what we say at IVoT, Ed, is where you really want to go to study any company. I don't care if it's Apple, I don't care if it's Mercado Libre. Last week, we were taking a look at Nike. The week before, we looked at Tesla. But in this case, where you want to go first, if you're an investor, is to their investor relations site, because that's protected disclosure. That's not PR. That's not some journalist honestly butchering what's going on at the company. It's disclosure that we will teach you at IVoT how to identify and read, and it's fun once you get used to using these tools. And it takes, I think, anywhere from a couple of weeks to a couple of months, depending on our going through our training, to become honestly pretty expert in using our tools.
Yes,
yeah, go ahead.
And Emile has done an amazing job of making something very complicated very simple, and that's one of the goals of IVoT. And I really, applaud you for that.
Well, yeah, and the whole forecast we just did was on 2 cells. It's the sales growth, and it's the amount they're spending per dollar sales. That's really the entire forecast, and that has, that is a solid way of looking at a company on a fundamental basis. Again, what we want to know is, are we long-term investors in Mercado Libre or any other company, and that we don't worry about the market near-term volatility in the sense of stressing it. We know if Mercado Libre goes down near-term for some reason, the market's rolling over, that's an opportunity for us with 100% return to take advantage of dips. We want to be, not the lemming following the crowd, but the ones who are there knowing what we're doing and taking advantage of when the market is giving us opportunity.
And to get access to this, you go to ivot.academy.com.
Yeah, you can go to our website. You can also click the link on here and go straight to our community and join and start accessing some of our programs and tools from the IVoT community link.
So in summary today, we discussed with Andrew the volatility in the stock market, the bond market, the tariff pause, and China. And then Emile did an amazing job of explaining Mercado Libre. Join us at the IVoT Community Exchange to learn about our platform and try out our programs and tools. IVoT's sophisticated yet simple tools equip you to analyze, forecast, and manage your financial future, including budgeting, investments, credit management, wealth planning, and business management. To learn more about IVoT and how you can help achieve your financial goals, please visit ivot.academy.com or scan the QR code on your screen. So thank you, both of you, for doing this today. And I really think you're both fantastic and really look forward to doing this again next week.
Thanks for having me.
Thank you.
Thanks, Ed.